sometimes the index performs and the active fund management underperforms. Now that sparks a lot of debate. Is the fund managers are adding value or not? It's better to buy an index and sleep on it, and over a period of time index will do better, and these debates keep coming now and then. So what is your view about active fund management or buying index and then just leaving it? What is your thought? Of course you're an active fund manager, so what would you tell the investors when it comes to debate about active and passive?
So I'm biased. I am pro active management. Having said this, if you look at data, you will realize that everything has a cycle. Active has a cycle, passive has a cycle of its own. What I mean by that is that see, there is this set of, let's say, BSE Sensex as an example. There are 30 stocks in that index. Now, generally speaking, indices tend to also look at very long term. So they also don't churn the index composition very often. And what happens is that if, let's say, within the index, if there are 5 companies which are doing a great job, their stock prices appreciates and the weightage of those 5 companies appreciates significantly. So over time, success of those 5 companies mean that the index also gets skewed, and success leads to the next round of when you peak on that performance, it leads to churn in the index not from change in the stock composition, but from the next round of stocks then start performing because of cycle peaking and earnings peaking, and so you do get a period where the same index, same composition, but different stock with a different weightage it starts behaving in a very different manner. Similarly, in our portfolio, let's say we also look at long term. The active management, the way it helps is that we don't need to be with this. Let's say when the stock, for us, if 5 stocks are performing, if they keep rising, we can choose to trim or book profits. Don't exit fully, but we can allow, or we can let it not go up significantly as a proportion of the fund, and try and avoid those cycles till so long as we can. In my opinion, I think passive money performs, or let's say index funds perform for a period of time whenever there is a very large amount of flows chasing limited number of stocks, or like 2023, the previous year, calendar year, where there is an extreme broad-based rally, where stock selection doesn't matter, number of stocks matter. For example, if you were to do an analysis of mutual funds for calendar year 2023 across categories, large cap, mid cap, large and mid cap, small cap, flexi cap, you look at any category, you will realize that on an average, funds which are having more number of stocks in their portfolio did better than funds which had less number of stocks. It had nothing to do with stock selection. It was purely the market, which was an extreme broad-based rally, where stock selection was not important. Being in the market with as many stocks was more important. Now, this is something that doesn't recur very often. So this cycle, last 1-2 years, I think index funds have done well on a relative basis. And that does bring that debate, as you are rightly saying. And whenever markets become normal, and though you've not asked me this, but I think we are reaching that phase where market returns will normalize towards lower levels. Whenever returns become normal and momentum goes away, you should see stock selection coming back in the market. And it is not a broad-based rally, which means that active managers like us will play an important role in the foreseeable future, which is the next 1 to 3 years. So it's a cycle, as I said. I think these phases come and go. So the moral of the story, or the answer there, is that both have a role to play. Some places, in some parts of the market, index funds can play a better role. But there is also a large part of the market where active managers continue to play a very important role. So as I again saying, asset allocation is important. An investor can allocate to passive and active both ways and get the best out of them over a period of time.